trillion. That's how much U.S. stocks lost in yesterday's trade. It was their worst drop.
100 points. The Nasdaq coming off its worst day since 2022, bouncing back somewhat, up just about 0.5%.
The U.S. stock market has lost over $4 trillion.
In March 2025, President Donald Trump reintroduced a bold set of tariffs aimed at reinforcing his America First policy during his second term. These tariffs were designed to curb trade imbalances, protect American workers, and assert U.S. dominance on the global stage. Trump's rationale for reintroducing these tariffs was rooted in his long-standing critique of trade imbalances that favored other nations, particularly China, Mexico, and Canada. With the U.S. facing significant trade deficits, especially in manufacturing, he believed that imposing higher tariffs would incentivize American companies to reshore production and reduce dependence on foreign labor. Specifically, Trump's new tariffs targeted imports from China, 10%, Mexico, and Canada, 25%. These moves echoed his first term's tariff policies, but they were more aggressive and more deeply intertwined with his 2025 economic recovery agenda. The immediate reaction to Trump's announcement was swift and brutal. The stock market, which had been steadily recovering after the pandemic, saw its largest single-day drop in recent history. U.S. equities lost $1.7 trillion in value, sending shockwaves through global markets. Several major American companies, particularly in the tech and automotive sectors, were hit hardest by the new tariffs. Tesla, Apple, and Nvidia faced sharp drops in stock prices, as investors feared that rising production costs would squeeze profit margins and disrupt supply chains. Sectors like automotive, which rely heavily on parts and raw materials from Mexico and China, were also impacted. The auto industry saw production delays and increased costs, triggering concerns over higher consumer prices and a potential slowdown in car sales. Almost immediately, Canada, Mexico, and China retaliated. Canada imposed its own tariffs on U.S. goods, targeting agricultural products such as dairy, pork, and grains, totaling $30 billion in value. Mexico followed suit, imposing tariffs on American automobiles and electronics. Meanwhile, China responded with tariffs on key U.S. products, including soybeans, technology goods, and agricultural exports. The retaliatory tariffs didn't just harm individual sectors, they also disrupted global supply chains. Products that were once easily shipped across borders now faced higher costs and delays. Companies like Apple, which had become accustomed to cheap labor and parts from China, found themselves scrambling to source materials from other regions. Supply chain disruptions drove up prices for consumers and created uncertainty in the market. With retaliatory tariffs raising costs across the board, American consumers began to feel the pressure. Household goods, electronics, and food prices increased, pushing inflation rates higher. According to a report by the Peterson Institute for International Economics, the tariffs could cost the average American household an additional $1,200 per year, significantly affecting disposable income. As inflation spiraled and trade tensions escalated, the fear of a recession began to grow. Economists started predicting that these tariffs could slow down the U.S. economy, pushing it toward a downturn. The White House, however, remained optimistic, suggesting that the U.S. economy was resilient enough to weather the storm. Investor sentiment remained volatile. The stock market oscillated between steep declines and occasional upticks, but the general trend was clear. Uncertainty was taking its toll. While some analysts remained optimistic, citing the strength of U.S. industries and consumer spending, others warned that prolonged tariffs could hurt global trade and stifle innovation. The White House's stance seemed to fluctuate. On one hand, Trump maintained that these tariffs were essential for long-term economic growth and that they would force trade partners to negotiate better deals. On the other hand, Treasury Secretary Janet Yellen and Secretary of Commerce Gina Raimondo expressed concerns about the escalating costs to American consumers and businesses, calling for negotiations with China and other nations. The technology sector, which had been a strong driver of U.S. economic growth, faced a significant meltdown. Companies like Tesla, Apple, and Nvidia saw sharp declines in their stock prices, as investors feared that the increased tariffs on China and Mexico would raise production costs and hurt profits. Apple, in particular, faced the brunt of these tariffs as it relied heavily on parts and assembly in China. Tesla, which had made strides in increasing its domestic production, saw its stock value drop due to fears that higher costs would eat into its margins. The U.S. automotive industry also struggled. With tariffs placed on imports from Mexico, key automotive manufacturers like General Motors, Ford, and Chrysler faced higher costs for parts, forcing them to either raise prices or risk a decline in profits. Ford and GM, in particular, adjusted their profit forecasts downward, signaling an impending slowdown in the industry. This in turn led to job cuts in manufacturing and a halt in production at several U.S. plants. The growing pessimism surrounding the tariffs led to heightened fears of a U.S. recession. Analysts noted that while consumer spending was still strong, job numbers were beginning to flatten. A slowdown in hiring, coupled with increased inflation, was signaling a potential economic contraction. The Federal Reserve faced an intense dilemma. The central bank had already begun to raise interest rates to combat rising inflation, but with the economy showing signs of slowing down, many feared that these actions could tip the U.S. into a full-blown recession. Jerome Powell, the Fed chairman, was careful not to raise rates too aggressively, signaling that the Fed would closely monitor the economic situation. The big question remained: would the U.S. economy bounce back from this latest economic shock? The White House remained optimistic, claiming that the tariffs were ultimately beneficial, particularly for American manufacturing and job creation. But Wall Street was skeptical. Analysts feared that the trade war would drag on for months or even years, prolonging the uncertainty and potentially hindering economic recovery.